Hello there everyone, today's video all about student loans and the change in the repayment profile for anyone who's got a student loan from the next tax year 25-26. So let's dive straight in. So this comes in 6th of April next year. So like I said, at the start of the 25-26 tax year. And when you pay off your student loan, it's basically, in terms of how much you pay, is all to do with how much you earn. So earnings, there's a threshold, so you have to earn a certain amount before you even start to pay back the student loan. And the earnings thresholds, they are changing from next year. So, when we talk about earnings, we're talking about if you've got a job, so you're on a salary, or you are self-employed, you have self-employed profits. That is what we mean when we talk about earnings. So, if you are on plan one, if you've got a student loan, it's plan one, you will start to repay your student loan once you hit a salary of £26,065, 26065. Okay. New threshold for plan two is 28,470. So what happens if you're earning in excess of those thresholds? Well, the rate that you pay back your loan is 9% on the excess. That isn't changing. That's been 9% for a while. Just the actual thresholds themselves have changed, gone up. So 9% on the excess is what you will pay back on your student loan. So, however, if you, in addition to having your job or your self-employed business, you have savings, interest, and investment income, so dividends from stocks and shares not held in an ISA or a pension, exceeding £2,000, that will also be taken into account. I.e., you'll have to pay 9% on that, as well as if you are in excess of those earnings. So, how do you pay this student loan? Well, if you are under self-assessment and you have to do a tax return, it's part of the income tax calculation at the year end. There's a separate line that says, right, based on all of this, you've got X amount to pay student loan, and it's collected through the tax system. So when you pay your tax bill to HMRC, a bit of that is for the student loan, and then HMRC pay that to the student loan company who administer the student loans. Now then, what if you don't do tax return? If you are an employee, you're on pay as you earn, and how is it collected? Well, it should be collected through the PAYE scheme, the operation of PAYE. Your employer should work that out on your pay slips, and you'll see it every month on the pay slip, student loan deduction. Also, on your P60 at the end of the tax year, there is a box that says how much has been deducted by your employer throughout the whole of the tax year that has gone to repaying your student loan. And what should you do about whatever's in there? Well, what you absolutely need to do is my top tip here: check, cross-reference the amount that has been used to pay your student loan. Now, this applies even if you're an employee or if you've got doing a tax return. The point is, the monies that have gone to pay off your student loan, either via the self-assessment or via your salary, PAYE, make sure they tally, they agree to whatever is on your student loan statement. Now, hopefully they will, but you've got to check, because what if for some reason there's been an administrative error and you get student loan statement and it says you're not paying down your balance, in fact it's going up because of interest, and you go, hang on a minute, I thought my employer's supposed to be deducting student loan payments, or I thought I'd paid a bit via my self-assessment in January and July every year. That's why you need to get the statement every year from the student loan company, cross-reference it, and it'll have a column. It's a bit like bank account, debits and credits, and it'll have a column that says, right, you have been credited with this payment from HMRC, and you should see it, and then that should tally to your records, whatever's on your tax return and your P60. But for heaven's sake, do yourself a favour, do that cross-check every single year. Now then, let's have a little look at a worked example. So, Fred blogs, he's on 30 grand a year as a self-employed sole trader. So, he's got self-employed profits, £30,000. Oh, and he's also got 2.5 grand of dividend income from his general investment account, not in his ISA or pension, because we don't have to worry about that. So, he's got 32,500 when you combine his profits and his investment income, and let's say he's on plan 1, type of student loan plan number 1. So, what has he got to pay back? Well, 32,500. What's the new threshold? So, assuming we're in the next tax year now, plan 1 threshold is 26,065. The excess, therefore, 6,435. And of that excess, his total income above the threshold, more or less 6,500 at 9%, 579. So that 579 would go on his tax return. So he'd work out his income tax, his class 4 national insurance, and then there's another line that says that number, basically 9% of this is that, and that 579 he'd wire that to HMRC with his tax bill. It all gets lumped together in terms of the payment to HMRC, and then HMRC strip it out, and they wire it across to the student loan company, guys. But this is why you need to get the statement and make sure that indeed has happened. And I can't think of a case where I haven't seen it happen, but I'm sure there are instances possibly where it's there's been some sort of timing delay or error, or I don't know, but you need to basically do that cross-check to see. So, just an overview there on increase in thresholds, the point at which you need to pay back your student loan coming in for the next tax year, 25-26. If you like this video, please do subscribe, and as always, I'll see you soon.